Welcome to Cross Border Tax Talks, where we discuss the latest trends in international taxation, from U.S. tax reform to the OECD's latest developments. I'm Doug McHoney, PwC's U.S. International Tax Services leader. You can follow me on Twitter at xbordertax. On this week's episode of Cross Border Tax Talks, I'm excited to have back Pam Olson. In July of this year, Pam will be officially retiring as a partner from PwC, where she served for the last 16 years as PwC's U.S. Deputy Tax Leader and Washington National Tax Services Practice Leader. Before joining PwC, Pam was the Assistant Secretary for Tax Policy at the U.S. Department of the Treasury from 2001 until 2004 under the George W. Bush administration. Pam, welcome back to the podcast.
Well, thank you, Doug. It may only seem like 16 years. I've actually only been here for 8.5.
8.5. Okay, because there was another interim spot between them. So thank you for correcting the record.
Yeah.
Well, and your career is certainly longer than that. We don't necessarily need to date it specifically. But you did start your career at a major law firm in the 80s after graduating from the University of Minnesota Law School. So go public law schools. I'm a University of Missouri alum myself. Before we really dive in, because I want to talk more about your career and some of the experiences that you've had, and then also kind of an outlook on tax policy, both in the U.S. and globally, and where you think things are heading. But we had Richard McGinnis on the podcast, another one of our retired partners, who shared some experiences about what it was like practicing taxation in the 80s. What's something that's changed in the practice that makes you nostalgic, just kind of how we used to work, and particularly for those of us that started their careers a month later, where we were issued laptops, like I just take it for granted. My first time with PwC, I was issued a laptop. What was that like, and any experiences or things that you're glad have changed since then?
Yes, I'm going to say this is maybe not nostalgia, because these are things that have definitely changed for the better. But yeah, the one of my first assignments when I joined the IRS Chief Counsel's office was to write the regulations on withholding on interest and dividends. And the regulations on withholding on interest and dividends were something we turned from proposed to final in about 7 or 8 months, I think, time. And the statute was repealed shortly after we got the regulations finalized. But there was about a 200-page set of regulations by the time everything was done and put together for it. And back then, we not only didn't have self-correcting typewriters that were available for us to use in the legislation regulations division. We did things by, this is unbelievable to sort of think about it today, but we did things by cut and paste. So for example, that you would turn in a draft and the secretary would type it up for you, and she'd give you the typed version back along with a Xerox of it, and you would mark up the Xerox and give it back to her for corrections. And she would literally, cut apart the pages to save what had been typed that was correct, and then to change whatever it was you were changing. So by the time my cut and paste of that 200-page regulation on withholding on interest and dividends was done, it was a pile of paper that was literally a foot high. So you'd take that, 200-page foot-high pile of paper to the Xerox machine and make copies, and that's how you'd circulate it to the people who had to review it. It was ridiculous. And
that is fantastic. I just want to make sure. I want to make sure that my fellow Gen Xers and the millennials and the Gen Zs, whatever, like when you're talking about cutting and pasting, you're talking about like physically cutting and pasting, right? Like we're used to the various word processing software. We cut and paste. That's based on the physical act that you guys are doing. That's hilarious.
Yes. So that's, cut and paste does have its origin in people who actually had to cut pieces of paper and put them together. And then you tape it.
Would you handwrite?
Yes, absolutely. I mean, because
so you'd handwrite the regs and then have to issue it, give it to somebody who would then type it out on a typewriter. Was that the process?
Yes, that was the process, and it was a little frustrating. There was a central word processing unit at the Office of Chief Counsel, but because the format for regulations was complicated, and it's actually one of the things that still today will oftentimes slow down something getting published in the Federal Register. Um, the central word processing folks didn't know the format, so you had to use the legislation regulation secretaries. The legislation regulation secretaries didn't work in central word processing. So it was this cumbersome cut and paste process. And so one of the other attorneys and I got really frustrated with this. And so we went in and found an accommodating word processing operator who showed us how to operate the machines. And we started doing the regulations ourselves after the central word processing folks had closed shop for the day, when we wanted to move something along more quickly. So that also reminds me of a hilarious story about how things have changed. Our boss came back from a trip to New York, and found us still at the office at like 8 o'clock at night, and uttered the infamous, "Don't stay here all night. Take the work home with you." Well, that wasn't so easy to do back then. Shortly after that, I moved up through the ranks in the Office of Chief Counsel, and one of the first things that we did was to get computers, desktop computers, not laptops you could take home with you, but desktop computers for all of the lawyers in the Legislation Regulations Division to facilitate their reg writing capacity.
Wow. It's amazing how much technology has changed. I mean, even over the course of my career, I think it will continue to do so. So you talk about your experience at Office of Chief Counsel, and then obviously at Treasury as the assistant secretary for tax policy. So you did 2 tours with the government. Why did you go to government? Can you reflect a little bit on that experience as a tax professional? Sort of what called you to that, and any reflections you have on that experience in your career, because you've gone back and forth between private practice and within the government.
It's interesting to think back to the difference in pay between when I first came out of law school and today. I mean, the government job was actually the highest paid job offer that I had in San Diego, where I started my career, and the same in Washington. So government pay back then was comparable to, or exceeded in many cases, what you would have been paid by a private sector law firm or accounting firm. So that's kind of an interesting change. But a lot of this was just that it seemed like the best way to start my career, because my husband was a foreign service officer and we knew we were going to be moving around. And so going to work in the government was a good way to get started in something that I was interested in, which was the practice of tax law. And it did indeed turn out to be a very interesting experience, because I really had a wide variety of experiences while I was in the IRS Office of Chief Counsel. I really learned a lot there. When it came to going back to the government to serve as assistant secretary for tax policy, I must admit that this was not something I really wanted to do. It was my expectation that my husband was going to end up going to work in the Bush administration at either the Commerce Department or the U.S. Trade Representative's office, and he did indeed do that. And I didn't really think that we could afford to have two of us in government jobs, because we had 2 kids starting college. And so it wasn't really on the table. I also really didn't want to do it because I was chair of the ABA tax section at the time. Practice was a lot of fun. I was really enjoying what I was doing. And so I had to have my arm twisted to go interview for the assistant secretary position. And after I went to interview for it and met with Paul O'Neill, who passed away very recently. He was the secretary nominee at the time, and his deputy, Ken Dam. I thought, wow, these guys are so interesting. This would be so much fun to do this job, because we really aligned on our theories of government, tax administration, and what the country ought to be focusing on. I ended up really wanting to go to Treasury and then thinking, yeah, but I don't have the right experience because they really need somebody who spent more time on the Hill. And that wasn't something that I had done. Ended up going in as Deputy Assistant Secretary for a year and then taking over the Assistant Secretary role.
What achievement are you the most proud of, Pam, from your time in government? Could either have been your first tour or your second tour, but is there something that stands out from your time there?
There are actually a lot of things. Like one of the things I think back on was the Treasury's development of a dividend exclusion proposal, and that proposal, I think, if Congress had ended up enacting that as opposed to enacting a 15% rate on dividends and capital gains, as happened back in 2003, I think a lot of the issues that we've seen in the corporate tax system over the course of the last 15 years wouldn't likely have occurred. So I'm really proud of the work that I helped lead at the Treasury Department on that particular project. And it also gave rise to, one of my stories that I had to write home to Mom about. I was over at the White House for a meeting that included a number of CEOs, and I was sitting between the president and one of the CEOs of one of the country's biggest companies, and the CEO said to the president, "Mr. President, I really like the dividend exclusion proposal just the way Treasury designed it." That was a write home to Mom kind of event.
That is fantastic, and really, really, what an amazing experience, and to be able to have exposure to the president and to spend some time at the White House. What a really neat experience that sounds like. So Pam, you've been through the last two major tax reforms in your 4-decade career. I was starting to question for a while there whether I was going to see one, starting practicing in the late 90s, but I've got one under my belt now. I say under my belt, we're still in the process. And then a lot of changes going on outside the U.S. That we've talked about on the cross-border tax talks here with respect to the anti-tax avoidance directive, really starting with the OECD BEPS, what's now referred to as 1.0, and BEPS 2.0. Are there any major trends that you've recognized, particularly over the last few years, with respect to not just U.S. tax policy, but global tax policy, and kind of where do you think things might be heading?
Yeah. So, as I think about it, there are 4 trends that really come to mind for me. One is transparency. Another is the growth in global trade and investment, which has obviously had a significant impact on the tax system because you have to deal with income crossing borders. A third is progressivity, and the fourth one is partisanship. And if we start with the first one, if we start with transparency, it means a lot of things to a lot of different people, and it has meant a lot of things over the course of the 4 decades that I've been practicing tax. But we've seen with respect to banks. There was a lot of bank secrecy if we went back a couple of decades. That's largely been eliminated. So there's a lot more transparency around the financial systems. We have information reporting on almost everything, and a wide recognition by Congress, the Internal Revenue Service, and really taxing authorities around the world that if you want to increase the likelihood of something showing up on a return, the best thing to do is to find a way to have it reported. I mean, we're still seeing that today playing out with some of the conversations that are going on around platforms that allow independent contractors to provide services. So, people looking for ways to increase the reporting, which means greater transparency, which means a greater likelihood of compliance. Tax return disclosure, starting in the early 80s, we started with requirements of additional disclosure of things by taxpayers on their returns, and that had a significant impact on how people thought about compliance. There's a line that I used to use a lot when I was at the Treasury Department about sunshine being the best disinfectant. And so, the more transparency you have about what's going on, the greater the likelihood that you're going to see people examining what they're putting on a return more closely. Obviously, that's also drifted over into financial statement reporting with FASB adopting FIN 48. Whenever that was, 15 years or so ago. And then, now we've got country by country reporting that was agreed to among all of the participants in the OECD inclusive framework effort as part of BEPS. As I think about some of this stuff, back in the 90s, I guess, when I've done a lot of tax controversy work over the years, and back, if we go back 30 years ago, 20 years ago, maybe even 15 years ago, there was not an expectation that there would be a disclosure on the part of taxpayers of issues that were on their return. You agreed to a process. You were a big taxpayer. You're going to be audited by the IRS every year. You agreed to a process for how this was going to occur, but that process did not include disclosing issues. There was no expectation that you were going to tell the IRS where the bodies were buried. Well, that's changed completely. Particularly in the programs like the Compliance Assurance Program, which started in the US but has an international side to it now as well. There is indeed an expectation that there will be a disclosure by taxpayers of the issues that are on their return or the issues that are coming up. In the case of the Compliance Assurance Program, it's in advance. So you're really telling the IRS before you even file your return that you are, what the issues are that you've identified that you want to work out with the IRS before you file your return. And then transparency also has another meaning in the tax policy world, and that's about the transparency of the system. And I think over time, unfortunately, in many respects, tax systems have grown more opaque. So they have lost their transparency because they've become so complex that it's really hard for most people to really understand what the tax rules are or how the tax system operates. And that's an unhealthy thing.
Yeah, I really feel like, Pam, that the U.S. has led the way in transparency, at least for corporate taxpayers. And you alluded to both reportable transactions, Schedule UTP, and then as we think about kind of what's taking place around the rest of the world, absolutely country by country, and the trend seems to be that the country by country reports will be potentially publicly disclosed. And then we had Martin Mascant on the podcast a couple of episodes ago where we started talking about DAC 6. The mandatory disclosure regime in the EU, which I think has a lot of both advisors and taxpayers kind of nervous. And frankly, as we've talked to some of our European colleagues and taxpayers over there, kind of reminding them of kind of the process that's happened in the US, and the disclosure, I think, generally speaking, and transparency is a good thing. And just kind of understanding how to comply with that certainly is a trend. The second one you mentioned is growth and trade. And, I can remember when I was in law school, and I mean, I just absolutely loved tax. I had an accounting background. And frankly, Pam, the reason I went to law school was that I didn't want to be an accountant. Of course, 20 plus years later, here I am, but just absolutely fell in love with tax. A big piece of that was I had an amazing tax professor. But in kind of contemplating what area I wanted to specialize in, I could really see globalization, and the growth in trade and supply chains really being a big driver. And I did an internship with one of the now defunct former big six public accounting firms, and really could see that trend, and that's really just continued, right? We'll see now after the events of the last few months, whether supply chains now are going to shorten. But talk a little bit about that trend and growth in trade and how you've seen that over the course of your career and where that might be headed.
Yeah, so you were prescient. I mean, growing up in a law firm that specialized in mergers and acquisitions, everybody had to know about Subchapter C, and if you were working on the financing side of things, then you needed to understand things like withholding taxes. But you worked a lot with the leasing rules, and you worked a lot with partnerships and special purpose entities, that kind of thing. And it wasn't really until some time into my time practicing tax that we began to see the growing importance of international, and it became, well, but I was the recruiting partner for about 5 years, and when people would come into tax, they would say, well, what should I do? I eventually said, well, you should learn international because the world is going international. And so, yeah, it's important to know Subchapter C. It's important to know a little Subchapter K. It's important to know a lot about a lot of different things. But really, you're going to have to understand the international tax rules because that's where the action is ultimately going to be, and that has certainly turned out to be the case. It's hard at this point to imagine not. You can't. It's how you can advise a multinational company without understanding something about the international tax rules, understanding how the system works, understanding the transfer pricing rules, that kind of thing. You just have to have at least a little bit of background in that in order to survive.
Yeah, absolutely, and how those rules interact, right? And I mean, I just think about some of the foundations of even tax policy, and as we think about a territorial system versus a worldwide system, and really understanding some of those key concepts and about the various jurisdictions that our clients and taxpayers operate, really, really, really critical.
Yeah, having to understand the implications of all of that as well, like the impact that our worldwide system had on how companies operated and how they competed, understanding how countries compete for investment, and certainly if you're thinking about where you're going to put your headquarters, whether you have a territorial or worldwide system, had an impact on that. I guess we've also seen, as a consequence perhaps of some of the increased globalization and cross-border activity, some erosion of confidence in the international tax regime. It does definitely put out there as an issue a lot of the debate that's going on at the OECD right now about whether countries are getting to tax their fair share of global profits. And we had this argument for quite a while about whether profits were escaping taxation or they were escaping sufficient taxation. And now it's gravitated much more clearly to a debate about whether or not countries are getting to tax the share of global profits that they want. So it doesn't matter whether it's being taxed sufficiently. The question is whether I got to tax it in the country in which I'm operating, and that's a lot of the debate that we're seeing going on at the OECD. So we've also seen a lot of rise in disputes among governments, not just on a policy basis at the OECD, but increased disputes on transfer pricing kinds of issues as governments argue over whether or not the allocation of profits between jurisdictions is appropriate. And that all means that we've also got an increased need for cooperation among governments because the rising number of cross-border disputes means that governments really have to get together better than they have in the past to agree on who should get to tax income and how to resolve the disputes over that.
So I think one of the big issues and big risks from our global tax system and some of these proposals that are out there, including the BEPS 2.0, where we had Will Morris on to talk about that, is just the risk of double, triple, even quadruple taxation. And absolutely agree, Pam, that both from a policy perspective as well as from an enforcement perspective, governments are going to need to work together. And just a lot of work has been done over the decades, right, of the global tax system and the treaty networks. And I do think there is a big concern about double taxation, and even as we think about the GILTI regime, right, and how that interacts with the foreign tax credit, and if other jurisdictions, other territories start to enact similar systems of GILTI. What I've been reminding some of our colleagues is that the foreign tax credit system is insanely complex, and it is the mechanism by which companies can avoid the double tax for U.S. MNCs or U.S. parented groups. But that is not a simple type of system for other jurisdictions to start to think about enacting, when historically they've had a participation regime and haven't had to deal with that. So it's going to be very interesting to see how things evolve, and trying to manage that double tax is going to be very important for policymakers, the enforcement agents, as well as the taxpayers.
You left out of that the beat, which is an explicit, I don't care whether another country has taxed it, I'm going to tax it anyway. So we've got systems out there that in our own country that don't give heed to the fact that there's the potential, or indeed the likelihood, of double taxation.
Great point. How could I miss the beat? And then and if other jurisdictions start to enact those types of similar rules, all bets are off. So I'm really interested to hearing about your thoughts on progressivity and that as a trend that you've seen in international taxation. Talk a little bit about that, Pam.
Sure. So, I think our tax system is very progressive, and it has been pretty progressive right from the beginning. But as time has passed, it has become even more progressive. We've taken more people off the tax rolls entirely, and shifted the burden up to corporations and to the wealthy. And that's really what we rely on for collecting taxes, other than Social Security taxes, which are, of course, dedicated to the payment of Social Security benefits. And that system taken together is, we look at both the benefit side as well as the tax side. It's a progressive system as well. So great deal of progressivity. And of course, the Republican Party has a penchant for liking to cut taxes, but also cares enormously about progressivity as well. And so as Republicans have advanced proposals to cut taxes, it inevitably means that you have to come up with mechanisms for cutting taxes that aren't being paid. So, you end up doing credits, refundable credits kinds of things, in order to ensure that the tax proposals, when they come forward, are in fact progressive in effect. So we've seen a lot of progressivity. Our system, I think, is probably among the most progressive in the world, but other governments tend to have fairly progressive systems as well. And of course, if you think about the tax systems in the developing world, they very often are focused on corporate taxation, because they don't have the capacity to collect taxes from their citizens in the same way that we do. So there's a lot of progressivity in the developing world. At the same time, there's a lot of debate going on about whether or not more income should be allocated to the developing world. And that's really what we're seeing playing out in part in the BEPS 2.0 discussion, but you can also see it in what comes out of the UN and what comes out of the IMF and the World Bank in terms of the concerns about the developing world and whether the developing world should be getting a greater share of tax, or getting a greater allocation of global profits that would allow them to collect more in corporate taxes.
So last one is partisanship, and I think that almost goes without saying. We've certainly seen that in the U.S., but I don't think that's really been unique to the U.S. as we've seen what has happened with the U.K. We've spent some time here on the cross border tax talks talking about Brexit, but a trend that I don't know if it started in the U.S., but certainly something that I've seen. And I'm a relatively newbie to the inside the Beltway since I've moved into our Washington office and have learned a lot from you and your team. But talk a little bit about that because you've been kind of at the heart of it throughout your career, through your 2 tours of government. What have you really seen from a partisanship perspective, and how has that changed?
Yeah, I do worry a lot about the fact that the country has become more partisan over the time that I've been in Washington, and there's been I have on occasion in the past traced it to the actions of some particular individuals. I'm not going to do that because there's so much responsibility or blame, depending on how you want to characterize it. But there's so much responsibility for the partisanship today. I'm going to lay some of it at the feet of the folks who have focused on um, um, getting elected or getting reelected, getting sufficient people from one party or the other elected to the exclusion of good policy. So it becomes the political process has become controlled by political strategists as opposed to people who are focusing on what's good policy, what's sound policy. I recall being in a meeting. This is 20 years ago now. So shortly after I had, almost 20 years ago, shortly after I joined the Treasury Department, and we were working on the budget, and one of the political guys who'd been with the campaign came into the meeting and said, well, the answers are in the campaign document. And one of my colleagues threw his pencil down on the table and said, that was campaigning, now we're governing. And got up and walked out of the room to try to call somebody to say, there's a difference between campaigning and governing. But unfortunately today, increasingly, there isn't. There is just campaigning. It's like there's a permanent campaign. And when there's a permanent campaign and the goal of your permanent campaign is to get rid of the other side as opposed to trying to find a way to work with the other side, it's really not a healthy environment, I don't think. So notwithstanding, all that, Doug, that there are ideas that have been enacted into law that represent the thinking of both parties, even though they'll be enacted on a purely partisan line vote. So, TCJA is a clear example of that. There's lots of provisions in the TCJA that had their origin with President Obama's proposals, with former Senate Finance Committee Democratic Chairman Max Baucus's ideas, with the current ranking member Ron Wyden's ideas. So there's lots of things in the TCJA that were part of democratic that had democratic parentage, and yet from looking at the reactions to it, you'd never know that. And you can say the same thing about the Affordable Care Act, which obviously Republicans objected to strenuously, and in the case of Affordable Care Act and in the case of the TCJA, neither attracted the vote of the member of the opposing party. But notwithstanding that, there are concepts in both of those bills that reflect the fact that there are agreements on a lot of issues. I did a program a couple of weeks ago with a former assistant secretary from President Obama's administration. I don't think he'd mind me saying this, but afterwards he said, I think if we put the two of us in a room, we could figure a lot of this out without a lot of disagreement. And I think that's right. I think if we can just stop the electoral part of it, the exclusive focus on what's it takes to get elected or reelected or get sufficient members elected to control policy in a very, squeeze out the opposition kind of basis, there's a lot of agreement among the parties and among the people who are in the parties about where we ought to go and what we ought to do.
I love that, Pam. It's focusing on what do we have in common, not what are our differences, and looking for those common grounds. And I agree. I think that we've gotten away from that, certainly not maybe even just from a tax policy perspective or a political perspective, but even social perspective. And I think it's a great observation, and something that, I think we can all do something as individuals, whether we're a politician, policy person, or in our individual lives. I think it's a great point. Maybe, Pam, the last question I want to ask you, I feel like we're at a crossroads here in global taxation and from a policy perspective. And maybe it's just because I'm still in the middle of my career, but it does really seem like we're an important crossroads from a global tax perspective, given where we are with the TCJA and with the pending election, and what could that mean to the historic with the TCJA, depending what happens in the election in November. As we think about BEPS 2.0 and the recent letter from Secretary Mnuchin to the OECD with respect to participating in Pillar 1 versus Pillar 2, just what is some broad advice that you have for policymakers, and not just specifically in the U.S., but as we're trying to get through this crossroads, and I have no idea what it means to get on the other side of this when I think about BEPS 2.0, but do you have some general advice for policymakers, both in the U.S. and internationally, from a global tax perspective?
Well, let's see. First, we need to drop the rhetoric so that we can have honest conversations about things. There's a discouraging lack of interaction going on, constructive interaction going on. There are so many times when the people who should be making policy should be listening to each other. They should be talking things out, and instead, we just have these explosive responses, and they're really not very helpful. One of the things I think has become very clear is that you need to have a narrative, and the narrative ought to come out of forming your principles and figuring out what your guideposts are, find your North Star, and then figure out what the right way is to get there. So, like when I look at the current OECD process, it upsets me greatly, because I think the reality is that other governments have come into this process with very different objectives, and objectives that they weren't particularly forthcoming about, right? So, as we've watched the process unravel a little bit right now, what's become very clear is that from the European perspective, the only thing they care about is taxing digital companies more, and in particular, American digital companies. So, it's not like they're trying to design a system that is going to apply fairly regardless of where the business is headquartered, that it's got a target on U.S. companies' back. And that doesn't feel right at all. And from the perspective of the U.S., obviously I'm biased. I'm American. I care about my country. I want to do right by my country. But I also think that the U.S. goes into these conversations with a view about what's good as a matter of economic policy, tax policy, that it cares about what's happening not just in our country but around the world, because we recognize that we live in a increasingly interconnected world, and that the more that we do to improve the economic well-being of people around the world, the better off we all are. And so, I think the OECD process can still get there, but maybe this is I've used this line a few times lately, but Hegelian dialectics. We have thesis, we have antithesis. Then you get to synthesis, but it feels like we're a long ways from synthesis, And I think we're going to have a lot more conversations um, with people actually listening to each other, and trying to figure out what is good for the global economy, as opposed to, what's a good soundbite. Oh, I tax those American giants. Obviously, it's a whole lot easier to raise revenue if you're raising revenue from somebody who's not within your borders, and that the fewer activities that they have within your borders that they can cut, then the more attractive it is. Yet, there's a line from a senator that was, "Don't tax me, don't tax the fellow behind the tree." That's a very popular kind of concept still with politicians, but today it's got a slight change. It's "Don't tax me, don't tax the corporation across the sea." Anyway, we need to move in the direction of having calm discussions about what's good policy, and then we need to figure out how to advance that.
Well said, Pam. And so I think we're going to leave it at that. So thanks for tuning in to this week's episode of Cross Border Tax Talks. A heartfelt thank you to Pam Olson, and congratulations on her retirement from PwC. Pam has made such an extraordinary difference on the firm, on the people within the organization, and just we're certainly going to miss you here at PwC, Pam. So thank you very much for participating.
Thank you, Doug.
So I'm Doug McHoney, PwC's International Tax Services Leader. Stay tuned in 2 weeks for another exciting edition of Cross Border Tax Talks.